Hello and welcome to the September 15th, 2010 video version of Invested Central's Chart of the Day. I'm Tom Bowley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we are looking at Agnico Eagle Mines Limited. This is ticker symbol AEM. AEM is about a $10.5 billion basic materials company. Focusing mostly in the gold area. Gold on Tuesday broke out to an all-time record high close, and as a result some of the individual gold names were getting a lot of attention. AEM was one of those, and you can see from the chart here how we closed up at $67.13. Notice how the previous peaks we had topped out. The highest open or close, or candle body as we refer to it, was up at about 66.40 to 66.50. You can see right here from these red arrows we got up there in the second week of May. Did it again in early September, about a week ago, where we got up, looked like we were making the breakout intraday, and then failed. Came back down after a gap up. This is actually a shooting star candle, which is a reversing candle, and off of that we moved back down, tested the 20-day moving average one more time, and then came back up and broke out to the upside. Now there are a couple things to kind of keep in mind in the short term. Number one, RSI is at 71 and change. 70 is overbought. So the fact that we do have a RSI in overbought territory, we should keep that in mind. Stochastics are not confirming though, because stochastics only at 72. So we do have a little bit of room here before both RSI and stochastics are in overbought territory. So with this breakout on heavy volume, I would expect near-term movement to the upside. One other problem here is you can see that the MACD curled up immediately with today's action. Even though we had been moving down in the last few days, the MACD had started to roll over. It did point back up a little bit here to the upside with today's action, so that was good. But if we were to go back and fail to hold this 66.40 area, we would be having a false breakout. It would show a false breakout with a negative divergence in play. So if you want to keep things really tight and close to the vest, I would say just be real careful if AEM is to close back below, say 66 and a quarter, 66.40, in that range, and especially if it's big volume on that reversal. Otherwise, I would expect any trip back down to about 66.40 or so to be bought, and in the near term for AEM to make another push to the upside. Down the road, another few days to maybe a week or so, I think any kind of a pullback that comes back down to this level, especially if the 20-day moving average continues moving up and provides more support from underneath. You can see the last couple times we've tested the 20-day, we've held. So as the 20-day moving average continues to move up, if we get a little bit more overbought in the near term, and let's say we get up to $69, $70, we could see just a normal pullback to the breakout level back down to about 66.40. So keep that in mind. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at investedcentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.